What is going on, everyone? So today I've decided to go over an episode to do with stop loss protection and management. So essentially, this is a good question that I've got from a lot of people. I'm just working on stop loss and protection, but I think more importantly, stop loss and protection really depends on your entry criteria and the overall trading environment. So if I just go off and I pick a pair, like let's just use GBP New Zealand as an example, as I'm just looking at it today. If we go off and we just select a piece of structure, and let's just say that we chose this particular sequence here, right? And we were looking at this whole period. So let's just take it back to, let's say circa around about here. Or actually, let's go even further back for simple reasons of this, right? So what we saw over here was the bigger picture. We understood that price came in here, tapped into this area, rejected, and then broke below. Okay, fine. So we've established at that point there that we're now trading below here. We came back up, and we've now created this sort of hook point right there. Came up, scooped, tagged into it, and there was a small bit of liquidity sitting above it, which it happened to just tag out and then sell off. Okay, great. So we understand the full psychology of what's happening in this picture. Now let's talk about an entry. So let's say that we're now on the daily, and let's say that we see it on the daily. We see that we've had this 1, 2, 3. There was no trade there, but then as we broke these lows, we were looking for continuation. Fine, simple. So we can see that we drew our line in the sand here, and coincidentally below it we had continuation forming. We had the footprint, the middle section, and then the final third section there. We did also have a washout here, which, give or take, if you did get an entry in there, you would have been taken out regardless, even if you went extra. It is unfortunate, it just happens from time to time, but in the end we can see that overall did play out, and there was another entry in there as well. So we can see that on daily. Let's go on to the 4. As we can see it on the 4 now, we're looking at the entry again, and we know, hang on, before I go to the 4, we know where we're actually targeting, right? We're looking at this as an overall range. Okay, so I'm just going to remove this for a second, and we're just going to keep it like that for simplicity reasons, but we understand. Actually, you know what, I'll mark this one up as well just for the easeability, and we'll mark up the low of the range here, which is basically here because it aligns up with this point here. So essentially it's just there, but I'm going to just put it on here so you can actually just see it as one big section. So I want you to put your full focus in just that area there, and this is something that I think when you are going through the mechanics and you're kind of just really getting to grips with your positioning, it's more important that before you even enter the market, you already have an exit strategy, and you kind of have an idea of how you're going to be managing it in multiple scenarios. And I think what happens is it tends to come with experience, where a lot of people do lack that, and I think because they haven't been able to experience things a certain amount of times, they end up acting on emotion opposed to experience because they don't have it. But there's some people that can learn from other people's experiences, and there's some people who feel like they have to experience it themselves, and I understand that. But a lot of the time is if you practice something well enough, you won't have to go off and experience it as much as you think. So going off this, you can see we broke this low, and then we started to form continuation in this area here. Right, great. So let's just look at this for a second. And we've established everything from here. We understand the rejection, we understand we broke below, and then we see correction. Now, obviously in terms of risk grading, this is a little bit more in the higher risk side of things, only because of the fact that we have a large correction over here, which was a failed continuation that broke but then presented another large one, which then again gives it that sort of, you know, is this still kind of becoming something like this to then just kind of move higher, etc., etc. But playing it for what it is, we do have a simple continuation below that, which is kind of in this overall range, and we understand that the risks are it could just turn up into that, turn into this, and then continue higher, which when you zoom out, it does seem large, but it doesn't seem like it's not a possibility. So that's just one of the variables. So anyway, going into this trade now, let's say we've established it, the high risk. We wanted to mitigate against the high risk by taking an insurance entry. So we're going to actually just focus on this area here. So I'm going to rein this back a little bit over here. Oops. Yep, over there. And I'm going to go to the hourly quickly just to refine it. So we already understood that we tapped into it. We essentially look at it psychologically, and we had the first touch, we had the second touch, and there was trades within the middle section here, which at the time could have looked like a two touch as well, just because of how it was squeezing, came into this area, pushed from there. Below there, again, look at the psychology of this, right? You have this trade here that's broken below, created continuation just below it, which is nice. And then again, continuation just below it, and then we kind of just decelerated at the bottom over here, which is, again, something that happens. So you could have actually got positioned in these areas, to the short, or even with a reduced risk entry. You know, it's possible that you could have taken that, just the risk reward would have been damaging, so you probably wouldn't have. But overall, that's already played out. So we're going to be looking at where price is now. So we understand that it's technically done more than enough. And if we're looking at this scenario here, on the bigger scale, we're looking at the exact same thing. We've had the continuation. It's failed to continue higher. It's stopped in this area. It's now broken below this area. And we're now in this formation here. If you're not with me, just watch that part over again, because it's very important to understand that we are moving below this structure. So it's technically a piece of its own, which is important. So now that I'm moving on to the next part, we have to just quickly play these candles a little bit further, and referencing the 4 hour is very important, going back and forth. And I think this is something as well that you would be doing in the live market conditions, and you don't realize it when you're just going through these testing phases, is that you'd be clicking through timeframes constantly. You'd look at the daily, look at the 4 hours, see how it ended, and so forth. So these are important factors. Now we can see the 4 hours actually ending pretty good, but for my sake, I'm going to draw a line in the sand. Any trade up here I would consider a slightly more higher risk, only because it's still in this sort of phase to the upside. However, we do need to understand that. How did we end on this? Well, we ended with a simple 1, 2, 3, phase 1, phase 2, phase 3. We tapped into this area, so risk entry is available. So we have to also understand that if we are taking a risk entry, I'm not taking it on the daily. You could take it on the daily, to be honest, with a limit play if you really wanted to, right? You've had that rejection there. You could have probably set it in here, to be fair. There was probably a trade right there, and you could have probably played it like that with pretty large stop loss, to be honest. And yeah, you'd play that for like a 3-to-1. Again, it's still another decent trade, because, you know, it's something that you can just put on the sideline and you could just let it run and you don't have to really worry about it. But at the same time, it could still take a number of days, if not weeks, to really get to where it needs to be. So I think it's only useful when you're in these impulsive runs. It's pointless trying to catch it when you're literally in the middle of some sort of mess. Daily wise as well, I think the continuations are way better for it when you get something like this, and if you got something in there where you could take advantage of the 4 hour, the daily, it's perfect, because then you can actually see that really commit. You can get in a little bit more aggressive, you know, and you're still getting with a 3-to-1 over a period like that. So like I said, there's potential everywhere. But going into this one now, I'm not going to look for a daily entry. I'm looking for more 4 hour to 1 hour. Ideally an insurance entry below here, or if I do get something clear enough, I'll take advantage of it in these areas. So was there a continuation? I don't think that was enough for me. If I go to the 15-minute, you could argue there was a trade in there. Really, you could really convince yourself to take a trade in there. There was one here, but to be honest, for me, that was slightly higher risk. This one over here, and I was happy to stay out of it. I think it was an advanced trade for sure. It's a very situational one where you'd probably take the trade like that, stop loss up here, and then you'd basically play the run like this. And if you got something like that, you would have been able to play the next one, which would have been below that, and then so forth. But really and truly, if we get the trade down here, this is what I'm waiting for. So I'm going to be patient and wait for that, because it's the most sensible one. If we get it through it as well, it's equally as okay. But as long as it's sitting there, it's not okay for me. I'm not going to entertain that, so I'm still going to wait, even if that looks great. Yeah, happy to let that one go. Now, anything in these areas, I'm more than happy with it. So as you can see, this was on the 1 hour, but it wasn't sitting in a great place. The reason why is because easily as it came there, it could have just carried on going back up and then filled this, and then potentially come back down for one more and gone, or it just continued from there and went. So that was the reason why I was happy to stay out of that. Now, we only have this inflection point, but if we can get a continuation between these two areas, That's how I'm going to be looking to take it. So this is obviously still going through entry types and stuff like that, but as soon as we get into the trade, we'll be able to talk about the management a little bit more clear. So let's just let this play out. And I'm on the 15, looking at it a little bit more refined, and I think I'm quite happy to just mark it up on here as a retest if we get a structure in there. So let's have a little wait and see. And okay, so we're not quite there yet. I'm going to go back to the hourly and have a little wait. To be fair, because that is technically through now, which is interesting because it was once above, it's not a bad area for me to be looking for a trade. There's this point and that point. I'm just going to look at them a little bit closer, and really and truly I think this point is more than valid. But if I can just size that up, if I did get an entry in there, yeah, I'd probably be okay to not have to mitigate against it, but I might, just because of the particular pair. So I'll wait and see how that gets there. And let's have a little see. So we're still on the 15. I'm going to go back to the 1 hour, and it's still hovering. It's looking pretty good for a continuation right now, but it does give signs that it's just going to drop off. So again, that's fine now. Same situation, but this is much better, because if I get a continuation in these areas, I'll be much better to go. So what I'm looking for now is exactly that. Let's go to the 15. Perfect. So this is another example, as I was saying, through. If it was above, it wouldn't be great, but right now, because it's through, I'm more than happy to actually look at this and entertain a position with this. And again, remember this, right? I'm just clicking the button I've got here in less than 2 minutes, whereas in the real life market conditions, this is 3 days, 4 days of just pure patience, discipline, and just following a trading plan. So I'm going to be marking this on here because technically, if you look at it, it's retesting the back end of all of that as well. But that's not the major confluence here. The major confluence is that it's kind of just left a footprint. If I go to the 5, I think it'll be a little bit more clear. You can see it's tight little consolidation there below all of that. Pushed off, left another footprint there, and came back up, near missed it, and now we can probably just take it out and sell. It's probable that we could tap into some liquidity over here. Doesn't really matter. We just need to see maybe a washout, push back in, insurance entry and sell, or even better, we could probably just get in with a 1 hour position if presented. Yeah, 1 hour, perfect. I'm just gonna have a little look at the 4. Yeah, 1 hour is exactly what I'm going to be looking for. So really and truly, we've got this as 0.1, and then we've got this as 0.2 as mentioned. So we're going to have a little look at how price goes, and yeah, okay, fine. I'm more than happy with this, even though this could really put you off at this point, because you're overall looking at it as a descending into this low, and it looks like, you know, this could still be something larger. However, we still need to understand that the bigger picture is dominantly looking for the downside. So we don't want to completely turn that off, but we want to remain neutral at this point to understand that if we did start pushing higher, we could look for continuation to go long. Otherwise, at this point here, if we do get a decent enough rejection at this point back into these areas, we might get a really good insurance entry. So right now, because we've actually got to 0.2, I can remove this line, and at that point I probably would have had it marked on around about here, where the liquidity was really sitting at the origin of that little correction there. And you can see it near missed it, it gapped, sold off, left a footprint, came up, and now it's filled it. This is perfect. This is beyond perfect. In fact, this could be a situation where I'm actually looking for a really nice insurance entry or 1 hour play. So I'm just going to play the next 15-minute candle, and great. So we've just broken above ever so slightly. We've now retraced back in with really nice retrace, but this isn't the place where I'm just going to take an entry, because we can see that the value area to the left isn't real key value. It's just a bit of consolidation. So if I do go to the 5 and I want to look at it a bit closer, this is where a more advanced side of myself will come in, and I think it's worth showing you this only because this is how I would operate on it. And because it's really an unstructured flag, you could entertain a trade like that. Now arguably you'd say, oh, 25 pips, that sounds pretty good. I would most likely say go 40, right? I know it sounds a bit like you're damaging your risk reward, but it's worth it. It's truly worth it to protect yourself for the worst case scenarios. And then at this point here, we're still hovering, no need to do anything, just sit with it, let it be, and we just about survived that position. Let's have a little look. And it's not looking too good, to be honest. Personally, What I would be doing now is looking to probably get out of this position, because it's not what it looked like it was going to be, truly, right? We had more than enough candles. Everything was set in place. It started to commit, then it just rejected. Fortunately, maybe I stayed in, maybe I got tagged out, who knows? But as it comes in, I would be out the market right there, right? Just when it came in, retested my entry point, I would have just literally had my stop loss placed, maybe even a few pips above. I would have just got out and let that be, because it's not the trade that I thought it was, and there's no point holding on to it in hope. It's ultimately evolving into something else right now, where most likely it's going to become an M star at this point and then sell off. So I'll let that be and let that play out. Let it go, let it go. And then as we move on, let's wait for it. Okay, now we're breaking these lows again. It's now becoming much larger as well, and you can see so many thoughts are going through the person's head at this point, where you're on the lower time frames as well. You have to realize that, and I just got caught out on the lower time frames because I was sitting on it. Going back to your neutral time frame of the 1 hour at this point, again, you can see how much work is involved just to catch an entry. Back to the 15, looking for refinement, nothing in there. It's very corrective. I'm not looking for anything clear enough, and boom, we just sold off. Now, the difference here is that there wasn't a clear enough trade, but we understood where the value was and where the potential was. But it's not always as easy as just taking advantage of something like that. I mean, if you sat on the 1 hour and looked for the 1 hour entry, arguably you could have taken it on that pin bar, the second candle there, set your trade there, put your stop loss above 60 odd pips, and you'd be in for a trade. Fine, you take that as a V shape. I don't really have a problem with that. It's just, it's not really my typical go-to trade, and for that reason I think I'll stay away. So look, again, I think this kind of comes into more patience as well. We're not always going to find trades, and I think that's something we have to accept. Sometimes market conditions can get very corrective and messy, and it just doesn't suit our system, right? And it doesn't mean that we can't trade it. It just means that we make a conscious decision and intentionally make a decision to not trade the markets during a set period until the markets start to respect things like structure and candlesticks and all this stuff, right? Because there's periods where the market goes off, and then there's periods where the market goes on. And it's just something that I just wanted to highlight and kind of point out, because it's extremely, extremely important that you keep that front of mind. So again, I'm still waiting for continuation. This actually is a bit squeezed, but I wouldn't be surprised if that started creating something quite nice. I think personally I'm going to be waiting for something with a little bit more depth, so I'm going to let that play out. Yep. There we go. That for me now is looking pretty good, so I will have that marked up like that. Doesn't really matter, it's not perfect. There we go. Okay, cool. So we're up here, and then there's a little bit of liquidity sitting right here. I'm going to go to the 15 and have a little closer look. Yep, that's cool. I'm good with that. Either in that area, this whole area here, as long as we can come up here, get some sort of clear rejection, insurance entry, I'm in. So I'm going to wait for that. Okay, we're up. We're coming back in, and we got the 15-minute retrace in that area. Now, the thing that I don't want to be doing is just jumping into a trade for the sake of it. So I can see it on the 1 hour. It's a bit of a larger sort of V shape right now. I do want to see a clear enough rejection, and that's it right there. So on the 1 hour, I can actually set that order. I can do it here. Additional protection if you really want it. Like, personally, I just don't care about the size of the stop loss, as long as it's going to be part of my ideal plan. And then I'm looking at this to trade this into that low for 5 to 6. I'm happy with that. Look, really and truly, you look at that, it says what, 101,312 pips or something. I don't know if that's correct, really and truly, but if it is, it does seem a bit crazy, to be honest. So is that actually correct? I don't think that's correct. I think it's 131 pips for sure, because that would be, yeah, I mean, I'm baffled right now. Anyway, it is what it is, and yeah, we'll let that play. And then I'm in that trade, and then now we're going to talk about management. If we go, remember, I haven't mitigated against this scenario where we do this, right? It's there, but You know, there a lot of things can happen, and I don't want to over speculate. I'm literally just going to keep it simple and stick on the 1 hour. And I've taken the trade now, I've set it, and I've left it, and it is what it is, right? That's it for the end of the day. Like, I'm not going to overcomplicate the trade and overthink it. Now the trade has now broken the low of this. We can see we're running over 1%. The 1 hour candles are literally moving to the downside and soldiering through. So I have an option, and I think time of day is roughly around about 3, 4, 5, 6, 7. I'm going to have a little look closer to 7 o'clock. Yep, at this point here, I don't want to be too aggressive, I'll be honest with you. I'm more than happy to just hold that and leave it overnight with the risk open. You know, the odds are that with spreads and everything, I don't want to just take the unnecessary loss, but at the same time I do want to protect my capital as well, and consider this as the first trade on your account as well. So in that situation, you know, you're not in a very bad situation. If the situation was I'm in drawdown, I'm very close to losing my prop firm account or whatever, or, you know, just whatever situation, you might want to be slightly more aggressive. And there's nothing wrong with moving this to break even right now, but truly it hasn't really moved away. It hasn't broken below and started forming anything. It still has room to go as well. We have this low here that we haven't even met. So again, I'll mark that on quickly just so you can see it on there. We haven't even got to those points yet. So before you start making any decision, you have to look at these variables. Remember, I've got into this position now, but subconsciously I already knew how I was going to manage it, and I should have explained that to you. So I see this as the target zone here. I can move to break even, but really and truly by the time we get here, we'll be running about 2.2%. I have more than enough time to move to break even if it's running around about 1.8 something. I could move to break even, truly, really and truly I could. On the more refinement side, I probably would have been able to probably get into a more refined position, but we're not here, we're not looking at that. We're looking at it on the hourly. On the 15, we can see that it's actually something formulating here. So if we did see something here and suddenly it came up here and then did a bit of a washout and then sold, would you be surprised? Not really. And then again, we're kind of retesting the back end of all of this. So even where the stop loss is protected there, it's fine. As long as maybe you protect your stop loss just above your entry point, you're probably a little bit better off. But let's play this out on the 1 hour and have a little look. And again, this is good. Now at this point here, you definitely, when you're approaching those areas, you definitely be moving to break even. In fact, I would most likely not want to move anything in profit, because 2% isn't really much, in my personal opinion. I mean, it's a great percentage to be making and so forth, but really and truly, I don't want to choke the position. And sometimes as a newer trader, you do want to start, you know, being slightly more aggressive, because you have to mitigate against the amount of mistakes that you're going to make, and you're going to make a lot more than the average experienced trader. So, you know, it's better to be a little bit more aggressive at times when you are newer. But anyway, going into this, let's say that I have now just locked in 0.25 for whatever sake, commissions and whatnot. I'm just going to go to the 4 hour, and now we just want to see how the 4 hour is responding to this area. So nice thing about this is we're still hovering, nothing's really changed. Okay, and now we've dropped off. So this is actually a very good thing in terms of management as well. Is had you been sitting on a lower time frame here, you might convince yourself of something that's not actually happening. And by going to a larger time frame, you're actually preventing yourself from making emotional decisions, because you're forcing yourself to wait for the 4 hour close. Some scenarios, if that started pulling back aggressively, you know, you'd consider a manual close. But again, like I said, 1%, if it's 1%, then fine, fair enough. You could have had 1% locked in if you really wanted to. Right now, you're running around about 3%. So at that point there, I'd certainly be looking at having about 1% locked in. And yeah, we'll go. Obviously, you can see I went with a larger stop loss. Had I gone with a more, you know, refined stop loss, this would be running around about 6%. But for the sakes of just showing the video and kind of the management style behind it, I'm just showing that you can actually go with additional protection and still make a lot of money. You don't have to always go aggressive, and aggressive does come with emotion. So to mitigate against that stuff, you have to kind of see and tweak your strategy and your rules that kind of work with the way that you think and trade, and then refine it over time. So what do we know? We have the next value area all the way down here, which is great. So we know that this trade has the potential of running to around about 5, 6 roughly. Right, more than happy getting out of the market around about 5, not a manual close, but just aggressive trail. and we'll see how that plays. So looking at this, yeah, we have about 1.25 locked in, and let's let that play out a little bit. So as price plays, we have the potential for another structure to formulate. So as we come in closer over here, what do we see? We see price has now left this little footprint, came up, broke it, and then did it again. And then we have to see what is it reaching to. Most likely it's reaching to a retest. So the odds are this is probably going to come up for one more and then probably sell. I'm more than happy with looking for an entry in those areas. I'm not sure about you, but it's looking pretty good if we get that. So I'll just wait patiently, let that do its thing, and then, oh, great. I got so excited I just clicked the button. That would be your second trade right there. Boom. And then again, I would go for the additional protection just because I can. And I'll take that, and then I can see to this low I've got a 3-to-1, so I'm happy with that. It meets my criteria, meets my rules. I'm good. I've got this one already in, so I've got about, call it 2% locked in. Now I've got this one in as well, and we'll let that play. So as we break these lows, this is when I'm going to be looking to get a little bit more aggressive with my next position. Okay, I know I've got a lot of lines on this right now, so I'm just going to clear this off, take that off. This one, I think I'll leave that one on. I'll take this one off, and then we'll see it play through. I will also move this across like that, just so we can kind of see what was what. And then we have that as the next one. Now, this can still develop into something a bit larger, but I've got the mitigated stop loss to protect me in case this does come back up and do something a little bit silly. So going back on the 1 hour, and yeah, we'll play the next candle, see how that plays. And then boom, we actually tapped into the low. As we tap into that low, I will move to break even naturally. Reason being is if we are going to develop, then at least I can get repositioned on the next trade. So then, yeah, okay, great. So I'm still in that trade, and we're running around about 1.8. I would lock in around about 0.25 again, commissions, and then let that be. This is more of an advanced one. I'm not going to go into this particular type of trade down here, but there is the potential for a 15-minute refined trade in there, but I'm not going to go into something like that. And that would be probably something like this with the protection. Most likely we might even wick to that second one there, retest and then sell. But let's have a little wait and see. Yep, wick, come up, and then that's the trade right there. That's your entry, and then you're in for the next trade. And then you probably would have taken the break even, seen that as the next one, and then at this point here, you know, you're running around about 2.5. So yeah, with a percent locked in, I think. Nah, I don't think you would do that. I think you would just still have it at 0.25, just being patient. But again, we have another structure right here, retesting the back end of this one. Now, further down in structure, it's not as highly probable, but I think this is more of a refined situation for me, where I go to the 15, I look at it a bit closer, then I go to the 5, and then, yeah, I'm going to wait and see how that formulates. Just give it some patience. Starting to look good. Let's see if we put pen order there. I'll put my stop loss up there. What am I looking at? I'm looking at a 1.6. Put it in here. I'm getting there about 3-to-1. I am not really favorable for this, to be honest. It's too. Let me go back to the 4-hour and daily. I just want to have a little look. Yeah, I mean, there's some potential there, to be for sure. I mean, look, at this point here, I've already got about 4% running on this trade with about 3% locked in. This one I've got 0.25, and then I'm looking for a third scale. And depending on my margin, I don't know if I'll be able to get the third scale in, but again, it's there. Obviously, this is the first time I'm looking at this data with you. So, you know, it's not like I know anything you don't. Let's play the next candle. Great. Good. So there was no trade just yet. Let that be. Okay, that actually looks pretty decent now. Like, we've literally come up with a little mini M star in there as well. Let's have a little wait and see. Okay, we might end up taking a 3% on this total runner. It's starting to look. Oh, here we go. We didn't. We survived. You see, 0.25 came through. Over this period as well, there were swaps. So, you know, again, it's debatable. It's probably likely with swaps, I would have had to open my risk again up here. You know, I've got large stops. I'm well protected. I would have probably ended up moving it up, and then as the market then swaps ended, I woke up around about here, moved it back, and then it dropped off. So I would have survived that. Yeah, probably definitely would have survived. Looks good. So yeah, essentially, I would then still have it just their protection. If I get tagged out, I get tagged out. Is what it is. Let's have a little wait and see. I'll move back to the 1 hour. I don't know why I'm still on the 15. And yeah, it just definitely looks like it's coming back up. So I'll be patient with this though. You know, I'm still in the trade, and there we go. So trade did drop off eventually. I'll go back to the 15 because now this is prime area for me to look for a trade. There is a bit of a gap there, but I'm not too worried because it's most likely going to come down before we fill it, which is fine. Just given the momentum and stuff. Let's wait. Just to kind of outline as well, because there's a lot going on at the second in here. This was just corrective price action, accumulating volume to the left. We then have this sort of situation here where I would say the reference point for the gap is really up here, but my attention is really coming into this point here. But again, you know, it's one of them situations where we've got 2 points very close to each other's. If we start formulating a near miss here, gap, probably wick to this one, sell off. Let's have a little wait and see. And yeah, so again, this is looking pretty good. Let's wait and see. Okay, so we're filling the gap. We're filling the gap. Have a little wait and see. Great. That is really great. Let's have a little look on the 5 quickly. Okay, so I mean, I'm not saying you have to use the 5. I'm just using it just because I like to see how it looks. In terms of a 1 hour, it doesn't look great. I'll be honest with you, it's not perfect. But in terms of the psychology of everything that's happened there, 15 minutes perfect, man. 15 minutes perfect. I'm not looking to take another trade in here, to be honest. This is not one that I'm going to be adding for a scale. But you know, overall, I can see this if there was just a trade in here where I was aggressively up. You know, you could entertain something like that. I don't see anything completely wrong with that. I'd probably just mitigate it above there and then let it be. But truthfully, I think you're good. I think that's gonna be good enough. Oh, now that changes things. That changes things. You could, yeah, you know, you get the insurance entry on that. It's a little bit nicer. And then you know, I would have happily added a scale there. But then, like, you know, I'm looking back and I've already got 2 trades on there. I'm happy to leave that, and yeah, I got about 3 point something to 1. At that point there, I think, as I mentioned, I'd probably be happy to exit the market around about these periods anyway, as I saw it hovering. But for management sakes, I'm not just going to manually close this one. I'm going to let it take me out whilst I'm managing. So I'm going to be managing a little bit more aggressive. This one I'm going to be locking in around about 4% just there. And then this one I'm going to be locking in around about, call it, I'm looking at 3. I think I want to be a little bit looser, but I'm going to say about 1.25. Right, that seems about the sweet spot for me right there. And then I'll let that be. So we'll let that play out. And play, come on, let's go. And it's just moving. Yep, great. Okay, cool. So we're out. Truthfully, I think, you know, knowing myself, around about these areas where we came in and retested that, I'd be out of the market 255 and around about, what is that? That one's 2.55 and that one's 5.2, so it would be a total of 7 point something. But equally, as a management point of view, I was happy to kind of get out with around about 1.24 and 4.03. That's 5%. And overall, you can see that this took a period of, let's say, while this was accumulating there, I would notice that this took a period of 13 days. But that's with 2 trades, and I made 5% on this particular pair. So again, it's not just about the management here, as you should have noticed. It's more about the patience, the understanding, being self-aware about your situation. I didn't want to go into the more advanced type of trades. If I did go into the more advanced type of trades, which I'll just briefly touch up on because I was watching them while we were in it, I would have most likely looked at this one here, and I would have got in for something like that. Which would have been roughly around about there for 13%. Probably would have got out the market around about around about 10 borderline, and then over here as well. This one was slightly more crazy as well when I saw it, and then I was like, okay, so we literally had all of this. I would have been happy with the trade like this, which I probably would have ended up surviving again, so I would have been happy with this. This was less on the AFT side, probably would have been taken out of this one as well. Borderline, another one here, which again I think was more on the aggressive side. There was this one here, I don't know if people noticed it when I was going through it. It was just very squeezed and tiny, but it was there, and you would have had to really get involved on it in terms of seeing it like this. I would have probably gone a bit extra to about 42 pips, and then again that one would have, if we got out the markets here, about 4%, and then there was the one straight after it as well, but I would have stayed out of that one because I would have been in this one. And then yeah, the rest are probably, the last one I was looking at was this one here. Probably I would have seen it something like that, and then I would have just taken it on the case of about 46 again and seen it in the sense of that's playing to this point 2.6, and then as it broke I would have been super aggressive and probably walked away with around about 2% ish. So overall, that this is how, on the AFT side of things, you would have see how you would have got 1, 2, 3, 4 types of trades, probably a loss in there as well because you would have been way too aggressive and just, you know, whatever. But yeah, 10, 12, 16, and then 18, with the best case scenario, which is the management I probably would have gone into that low there, is probably 12.5, 15, 16, 16%. Wow. Okay, yeah, 20. And yeah, so over the same period of those 15 days, the capitalization would have been over 20% as well, alone on these pairs. So again, if you get good at looking at things on the side of the hourly, the 4-hour, and so forth, you'd be able to recognize that, and then you'd be able to know where to position yourself on a more advanced side of things as well. But it's all of a domino effect, essentially, right? Because we started on the daily. We understood where we were, and then we took full advantage of just that little sequence there. Now, if it was me, you know, I wouldn't care so much about everything. I mean, look, if I analyze that sequence there alone, it would have been a much more easier on the eye sequence, but it's not the best ones as well. Like, they're great for sure, they're great, but these ones are phenomenal. You know, like, there's great and there's phenomenal, and sometimes phenomenal comes in its ugliest forms. That's why it's good to learn to trade ugly. So guys, in terms of management, key one is PSE. Like always, if you go back and you study the whole PSE concept of positioning, sequence, entry, which is in the mechanics, you know, you're gonna fly. Other one is more so just kind of understanding the mechanical behaviors of this and what increases the probability of this being a really good sequence. I think as well that was one of the reasons why subconsciously I am picking sequences like this, because I already understand, without having to see it from the higher time frame that I committed, that a sequence, something like this is more than enough. Why? Because if you just zoom out for a second to the daily, and you see it here, what did we have? We had this bit of liquidity, we had this little footprint, we took it out. That footprint was a miss to this one. We ended up taking it out with three tests, which then failed. We then broke the structure and we created this below it. The psychology behind all of that makes so much sense, and it repeats itself over and over again, and it's something that I've seen a very strong commonality with GBP New Zealand. So I just wanted to kind of point out, again, there's loads of little intricacies and things you pick up and learn over time, but you don't need to wait for something like all of that to make 20%, or a huge run like this on the daily, right, where you get into one trade, make 3%, get into another trade, make 3%, get into another trade, make 4%, and the next thing you know, 6 months has passed and you've made 10%. No, absolutely not. You can literally do it in a month. You can have a phenomenal month, but it only comes when you wait patiently for these things. You don't know until roughly around about this period that you're going to have to wait an additional month till you get your sequence. But with that hard dedication and patience and understanding the intricacies of these patterns, right? Understanding all of that, all these little parts inside here that enable you to make money but also understand what's going to happen next, then enables you to get positioned so well multiple times within a sequence on multiple time frames with an advanced perspective that you can make a lot of money. So guys, thanks for watching. I hope this was very, very valuable. I didn't want to make it too long because I wanted to just kind of get straight to the point with it, but I did kind of go off a little bit. If you found a lot of value in this, drop a like, hit a comment. More than happy to make more videos like this. I love getting requests like this. Usually I jump on calls with people and kind of just explain that to them, but I thought I'd make a video this year and just kind of put it out there because no, I don't want you to lose money, but at the same time I want you to kind of see that trading can be something a lot more than just trying to make money. There can actually be process, there can be discipline, there can be a conscious, systematic process you can put in place that can really just not only protect your capital, but also protect your mindset and make trading a little bit more challenging for the mind, but at the same time entertaining for the wallet. No, but entertaining for the sense that you're having similarities in your trading, you're building a great trading journal, you're feeling more optimistic and abundant a lot of the time, which is going to generate more wealth for you. And you want to kind of see it more on that kind of side of the more I'm actually doing my processes, my routines, my disciplines, as a side effect, you're going to make the money. Not, I'm going to just try get into these trades so that I can make the money and then I can do this, I can do that. No, I'm going to get really good at just journaling. I'm going to get really good at affirmations, really good at gratitude, visualization, my daily goals, all of these little things, reading. I could actually go on with a huge list because I actually have it right here. Fitness, exercise, community engagement, content creation, listen to a podcast, deep breathing exercises, honestly, review your goals. All of these small little things, meditation, they can all make a huge impact on an incremental effect where they're all compounding to improving your psychology. And then obviously you want to be training your technicals as well. I spent the majority of 2024 training my technicals, where now moving into 2025, I don't have a technical issue. I have more for psychological gap in certain places. So I'm fixing those areas, and that's making me overall becoming more of a rounded trader. So yeah, kind of just wanted to kind of throw that out there, share a little bit with you as well, and just kind of say, if you are struggling with something right now, a really interesting thing that I read in a book called Thinking Fast and Slow by Daniel Kahneman was, don't reward profit, reward discipline. Right? And that's a very, very important one, where when you're looking to gain things or achieve things and you're like, oh, I'm gonna do this when I pass my first funding assessment, I'm gonna go to a restaurant. Well, if you see that as a reward, I mean, obviously I'm a big foodie, that's why I thought of restaurant, but if you're going to reward yourself and do something like that, do it for being disciplined. Do it for ticking off your daily goals for a whole month, for 60 days or 30 days or 90 days, even better, right? If you do a quarter in a year, and you could put a small little pot of cash aside every month if that's your thing, and then at the end of the quarter, you say, you know what, I'm going to treat myself to a little vacation, right? Because for the past 90 days, I've literally been going all in. I've been doing my journaling every day. I've been doing my affirmations. I've been doing my reading. I've been doing my watching multiple content. I've been, consistent with these areas of my life. I've been going to the gym, this and that. That's something that you reward. It's not, oh, I just passed my first funding assessment on 3 trades after 7 months. Now, it's a huge achievement, blah, blah, blah. Yeah, it's an achievement, but that's what you're rewarding. And you're rewarding the fact that you just passed an assessment, because passing assessment is actually quite easy. What's difficult is everything else around it. Doing the journaling, doing the affirmations, doing all this stuff consistently every single day, showing up, doing your ASR. If you do that stuff, that's worth the bigger the reward. And I say that because as a side effect of doing all of that stuff, you're going to then see that the money's going to come with you as a magnet. So guys, I hope you found that very useful. I don't want to go off on too much of a tangent, but there was a lot of value in this episode. Definitely, I will make more management videos in the future. And yeah, if you have any more questions, drop them in the comments or hit me up on Instagram. Or if you have Discord, you can message me on Discord. I'll be more than happy to get back to you guys. Have a lovely one. I'll catch you guys in the next one.